Good morning. Happy July 4th or Independence Day. I'm coming to you on Saturday morning, but I'm actually taping this the day before because I'll be celebrating with my family on the 4th of July. So today's webinar is going to be a pretty quick run through of the PPP Excel expense tracker and forgiveness calculator workbook that's in Excel. I'm going to talk about some of the rules and go over some of the items that and how they show up in the workbook to help you understand how they work. So we'll get into that as well. But before we do, we're going to go through just a real brief introduction here of a couple items that I want to bring up. As everybody should know by now, the PPP Excel workbook can be obtained at www.pppexcel.com. It's purchased through Lineberg Information Services, and it comes with a money-back guarantee and free unlimited updates. We're on version 1.9 right now. That was updated after the June 22nd interim final rules for just some minor changes, but we suspect that it might be another version coming out sooner than later when we get the additional guidance, FAQs or IFRs from SBA. I did find out this morning that the SBA might be changing the forgiveness application again. I heard that from a banker, so I'm not sure why they would be changing it, but we'll have to keep our eyes and ears open for that. One of the most important things to cover right now is, being that this is a short webinar, what I want to try to accomplish. I want everybody to get a better understanding of how the workbook actually works, give you some tips on how to use the workbook, give you some tricks on how to maximize your loan forgiveness, because I think there is a strategy now, especially with the 24-week covered period option, and what to do or what you need to do to get ready for loan forgiveness, even though we don't know some of the final rules yet, and I'll get into that briefly as well. So that might actually change because some of the banks have been telling us that they won't accept the forgiveness applications until after the SBA actually gives them the final approval to submit the applications. So it could be that a borrower is ready to submit their application and the lender is not ready to accept it. And why that's so important is because if you've restored your full-time equivalents for your employees to a number that gives you 100% loan forgiveness, you're going to want to submit your loan forgiveness at that time, because the guidance right now tells us that once you've met the FTE requirements and you've submitted your application on that date, that's the date you must count. So if your lender tells you that you can't turn in your application for another 2 or 3 weeks, you might want to physically submit an application to them or post that to them that this is the date of your official application date because your FTE count. I'll get into that a little bit as well in the spreadsheet. Always, a lot of people have been asking me, where do I begin when I am working with my PPP loan forgiveness? And I've told a lot of people now lately, kind of begin with the end in mind. That was a term coined by the wonderful Stephen Covey. And what I mean by that is, what are you trying to accomplish? Do you obviously want to get 100% loan forgiveness, or is there a timeline in which you need to get this loan paid off sooner? So look at it in terms of where you are in the process. If I'm trying to accomplish 100% loan forgiveness, then let's figure out what we need to do to make that happen. And there's kind of some mathematical ways to do that. So before you get into the loan forgiveness process, there's a couple questions you want to ask yourself. And that the most important question, because the biggest question I get from clients and from people working with the PPP loan forgiveness is, how do I count my FTEs? What periods do I count for? What's the safe harbors? And what a lot of people are missing is the fact that if they didn't have a change in their employee status, then they might not even need to count their FTEs. And there's so many different exceptions and exemptions right now that it's really best to start there. And when we get into the workbook, I'll show you that, where the best place to start is. But if you have not reduced your employees, if you have not reduced your employees' pay, if you have not reduced your employees' paid hours, if everything's kind of stayed the same through this process, that's great for you. That means that you probably don't need to even count your FTEs. And like I said, we'll get into that. The other question that a lot of people get confused on is the 25% pay rate reduction and how it works. A lot of people believe that if the employees have worked fewer hours, their pay goes down by more than 25%, then that is what the pay rate reduction is. And that's not correct. The pay rate reduction is truly a reduction in their pay rate on an hourly basis or a salary basis if they're working 40 hours a week. So keep that in mind. If you haven't reduced your employees' pay, then you're okay. You do not need to even deal with this one issue. I believe Congress put this in for the purposes of making sure that small businesses didn't take advantage of their employees by rehiring them back at a lower pay rate. So, and I haven't seen a lot of people who have done this. What I've seen is they've reduced hours, they've maybe made some slight reductions in pay rates, but certainly not 25%. The majority of the people I've spoken to, vast majority I've spoken to, haven't done a pay rate reduction. So know how it works and then determine whether or not it applies to you. The next question you want to ask is, can I spend all my PPP loan money on qualified expenses? Now, qualified expenses are our payroll costs and our non-payroll costs. And inside of our payroll costs are gross wages, retirement plan contributions, health insurance, and state and local employer taxes. That all falls under the umbrella of payroll costs. Our non-payroll costs are mortgage interest, rent payments, utility payments. So we'll get into those briefly as well. Most of the people are telling me, yes, obviously I can spend all my money on qualified expenses, particularly if I can go beyond 8 weeks. And then the last question is, can I spend at least 60% of my PPP loan money on the payroll costs? Because that's the threshold you need to meet in order to achieve 100% loan forgiveness. So that's kind of one of a couple things I wanted to cover, the questions you should ask yourself before you start in this process at all. So now we're going to actually go into this spreadsheet and we will take a look at it and we'll go through some of these specific items. So when you land on the first home page, if you will, it's the red tab called Instructions Start Here. Like I've said before, this is kind of where we're dropping just basic information for all of our users to see what they are should be looking for. New information gets posted here. You can see that there's a notation here that we updated the spreadsheet for relatively minor change from the June 22nd IFR, which essentially told us we could file for a period less than 24 weeks, but more than 8 weeks. So we'll get into that as well. That's really the only major change that was made in essence on the June 22nd IFR as it applies to the worksheet. So when you go into the worksheet, you'll start here, like I said. We still only have an 8-week version and a 24-week version, but I'll show you in a moment that the 24-week version can now be used for a shorter period of time, 16 weeks, 12 weeks, whatever the case may be. The expense tracker hasn't changed. Quite frankly, this hasn't changed almost from day one. The only difference here is that we've had some new information regarding S corporations, owner employees compensation and so forth. For example, on an S corporation shareholder, you'll see that the health insurance is no longer included in the health insurance column. It's included in the gross payroll column because under IRS guidance that goes back to 2008, it tells us that S corporation shareholders that own more than 2% of the S corporation stock must include the health insurance in the shareholders' wages. So we can no longer include shareholder health insurance here for an S corporation. Now, if you're a C corporation, you can still include your health insurance. We also know that if you're a sole proprietor, a partner, independent contractor, or a self-employed individual, you no longer get to count your health insurance or your retirement plan contributions. So there's some changes there. Before we go further, I'm going to bring you down here to the quick reference guide that was published by Alan Gassman's group a little while ago, and they have provided a neat little chart here for us to look at what the healthcare expenses are that can be included in the forgiveness application for the different categories of individuals. So for example, if you're an S corporation, like I mentioned just a moment ago, you can't include any of your group health insurance. You can't include your group health insurance for your employees. You can include your group health insurance for C corporations, and you can't for the partnerships, sole proprietors, and independent contractors. So this little quick reference guide is a super handy starting point at giving you some information and guidance on what is and what isn't included. Keep in mind also that this is based on the most current guidance we have, and we know that the SBA keeps changing the rules on us on a pretty continual basis. So we have to kind of keep that in mind. The chart below is similar. It talks about what the compensation amounts can be included. And this has created a lot of confusion because we all got real familiar with the caps that were on the 8-week covered period, the original 8-week covered period. And we knew that the compensation cap was $15,385. We all know now that math is simply 8 divided by 52, 8 weeks divided by 52 weeks, which is 15.385%. We knew that the compensation cap was annualized salary of $100,000 per year, which means $15,385 was the cap. And that was pretty much the cap across the board. Everything seemed understandable, and we finally figured that out. And then they decided to throw a little curve at us with the PPP-FA, which is the Flexibility Act. We know that went into effect on June 5th, and that told us we had some new caps. The caps, unfortunately, didn't stay the same across the board. It got a little confusing. For an independent contractor, an owner-employee, which we believe is an S corporation, shareholder, owner-employee, C corporation, shareholder, owner-employee, those caps became $20,833. And where the SBA came up with that amount is they said that your loan was originally based on an annual salary of no more than $100,000. If you remember when you applied for your loan, that limitation was in play. So the $20,833 is simply 2.5/12 of $100,000. And the SBA did this because they didn't want owner employees to reap a greater benefit in the loan forgiveness than they got in the loan itself in the first place. But you'll see that what they did for non-owner employees was they went ahead and increased the cap on their wages to $46,154. And that is 24/52 of $100,000. So if you have an owner that makes $100,000 a year and a non-owner that makes $100,000 a year, they have two different wage caps now for the compensation portion of the calculation. So it gets quite confusing for a lot of people. Now, what we don't know, and we haven't gotten an answer from SBA yet on, is the SBA told us on June 22nd that we can actually apply for the loan forgiveness before the end of our 24 weeks if we've used all the money, which I imagine most of you that are viewing this will have used all your money before the 24 weeks are up. In that, we don't know what the wage caps will be for those periods. Now, we can kind of assume that the $20,833 cap will probably remain because a $20,833 wage on $100,000 is roughly 10.6 weeks of pay at $100,000. So we believe that those individuals that apply anytime after 10.6 weeks, the owner's compensation cap would remain $20,833. And it might even be $20,833 at any point beyond 8 weeks. We don't know what the SBA is going to tell us about that. It's the non-owner employees that gets a little bit gray. Are we going to be allowed to continue to use the full $46,154 if we don't go for the full 24-week period? So that's the one item that is still up in the air that we're not sure. In the workbook that I've got here, if you go out to the 24-week period, you'll see that we've had to make a minor change to the compensation calculation. And that's right here, that you'll see that the period of time for the covered period has had to be entered into the worksheet for purposes of calculating the loan forgiveness, because the number of hours for the FTE calculation is based on a full 24-week period. So what we've had to do is you've got to enter in the number of weeks that are in your actual covered period. So for example, if your covered period was only a 16-week period, you've got to enter 16 weeks here now. And the only reason for that is to calculate your FTE. And in this case, your FTEs is for the covered period. Now, remember what I said at the outset of this. If your FTEs don't have to be counted for the period, then this isn't really that material, but you'll still need to include it in there for purposes of calculating FTEs. You can see that we've still listed 46,154 as the wage limitation for non-owner employees that make less than $100,000 a year. You'll see also that the wage limitation is 46,154 for any individual making over $100,000 per year. But you're going to enter the person's actual wage amount there. For owner employees, we still have that original limitation, which is based on what their 2019 compensation was. So kind of keep that in mind here. We know that the limitation is $20,833. So if the person's salary, say for the covered period was $15,000 and their total compensation for 2019 was $72,000, if you put that in, you'll see that it'll take the cap at $15,000. If their salary was over $20,833 for the covered period, you'll see that the limitation is still at the $15,000 because it's based on the $72,000. If this number goes up over $120,000, we get the cap at $20,833. So there's just a couple different calculations you have to keep in mind of there when it comes to the owner's compensation. So that's important to remember. And that's in the 8-week tab as well as the 24-week tab. So there's really no difference as far as that's concerned. If you'll see down here, it's still all the same. The only difference is we've got a slightly different salary amount. We're back to that original $15,385. So that's slightly different from that perspective. That's the only major change in this workbook. It's still called version 1.9 versus the other version 1.9 that wasn't updated for the June 22nd, 2020 IFR. So I don't think it's that important, but it is going to be important, especially if the SBA comes out and tells us we have to prorate our compensation for a shorter than 24-week period. So we'll have to keep in mind that that might be something that we have to deal with. So I want to go back to where I started in the outset of the presentation, and that is with respect to the different forgiveness application exemptions, the FTE exemptions. I want to go through that real quickly and just show you that we have two different safe harbors now. Originally, we had only one safe harbor, and I keep reminding people we technically have 3 safe harbors. I'm going to show you that right now. It's this one right here. It's a self-certifying item on the application that says, I did not reduce any of my employees, and I did not reduce my employees' pay during the period January 1st to the end of my covered period. So if your business, like I said, was lucky enough to stay consistent throughout this year, you were able to pay your employees as you regularly do, even if your business was down, but you still continue to pay your employees, and you answer yes to this question, you don't count any FTEs whatsoever, and you get an automatic 100% loan forgiveness if you've used all the money for qualified expenses and you've used at least 60% of the loan money for payroll costs. So that's pretty easy to keep in mind. That's the first, in my opinion, that's really the first safe harbor. The application also has two true safe harbors. The first one is the safe harbor where it says, I was not able to operate my business during the covered period, or really anytime after March 1st and during my covered period, because my business was closed, partially closed, shut down, ordered to shut down by a local government based on guidelines or guidance from CDC, HHS, or OSHA. So this is that's a really broad definition that includes a lot of businesses that were required to close, say a movie theater, a restaurant, a doctor's office, any type of business that was ordered to close down either by a state, local, or federal order. And that order was based on guidance or guidelines from CDC, OSHA, and HHS or HHS, then you would pretty much be able to stop counting your FTEs as well. We're going to look for a little more guidance on this because for right now, it's a little bit of a gray area We have some people we've spoken to that were partially closed. We have some people that they might have been an essential business, but they weren't sure and they were closed for a time. So this is going to be a really broad area. But the most important thing to point out here is that the exemption, the safe harbor, if you will, specifically mentions that it's based on guidance from the CDC, HHS, or OSHA. So it's not that you had to have an order from one of those three governmental agencies for a closure. It's that the closure was based on guidance from one of those three. We believe that's very interesting and important to point out here, particularly for some of these local governments that really got aggressive with their closure orders and made local businesses close. I'm in Tampa, Florida. Our mayor came out and told us in late March that all non-essential businesses needed to close, and we had a safe stay-at-home order. Some businesses looked into whether or not they were essential or not. If they found out they were essential, they could stay open. It might come back to haunt those businesses now, because they might have been better off if they were closed for a week or two, because they might meet this exemption. That's the other thing I want to point out, is it doesn't tell us for how long we had to be closed. It just says that we were not able to continue to operate, or we were unable to operate as we normally do as of February 15th, 2020, anytime after March 1st. So I believe that's going to be a very high rate of applicants using that exemption. So we will see how that goes. The other safe harbor that's truly a safe harbor, and it's been around for a while now. Originally, it was the only safe harbor. It's safe harbor number 2 now, and this one's got a lot of people confused. This safe harbor is the one that says I've restored my FTEs, or my employees. So I had a certain number of employees on February 15th. My employee count went down from February 15th to April 26th. And then by the date I submitted my application, or December 31st, 2020, I restored my FTEs back to their February 15th number. So if I've done that, then I've met this exemption, this safe harbor. And by doing so, I'm fine. Now, the point of this is, originally the date was June 30th. And so a lot of people have gotten confused on this because they thought it was still June 30th. And it's not. June 30th is completely gone now, and it's been replaced by December 31st, or the date you submit your application. And the reason why I'm emphasizing that is because what I've learned is that a lot of lenders aren't taking the applications when the borrowers are ready to submit them. So I believe that if you've restored your FTEs and you're using one of these safe harbors, or this particular safe harbor, then you're going to want to submit your application as soon as you possibly can when you've met this safe harbor. You do not want to take a chance and submit it a week or 2 or 3 or a month later, and maybe your FTE count is no longer meeting this safe harbor. So check with your lender, let them know that you are applying for the forgiveness based on the FTE Reduction Safe Harbor 2, is what it's called by the SBA right now. And you are telling them that you need to submit your application, because once you've submitted your application, if your employee headcount goes down, you are not going to be responsible for that, and it does not affect your loan forgiveness. So that's why that submission date is so important. So don't forget that as well. I think that there's going to be a lot of people that get confused with that, and it creates a problem. Now, the next thing I want to talk about when it comes to full-time employees and FTEs is that we still have those reference periods. So if we haven't met any of these safe harbors, we haven't met the rehire exemption, we haven't met the CDC closure exemption, we did reduce our employees or our head count, then we've got to calculate our FTEs for these reference periods. And the PPP FA did not change the reference periods. A lot of people believe they may have, but as far as we know, they have not. So you're going to still have to count your FTEs. If you fall under this category, you're still going to have to count your FTEs for your covered period. And you're going to have to compare that to as many as 3 different base periods. They're called reference periods. And so the first reference period is February 15th, 2019 to June 30th, 2019. The second one is January 1st, 2020 to February 29th, 2020. And the third one is only applicable if you are a seasonal employer. And you would only use this one if you actually applied for your loan as a seasonal employer. So if you didn't apply for your loan as a seasonal employer, just forget about the third measurement because it doesn't apply to you. You don't have to do two. So you calculate your FTEs for these two periods, compare them to your average FTEs for your covered period, and that creates what we call our FTE reduction quotient. And our FTE reduction quotient just tells us that's what percentage of our costs we're going to be able to include in the forgiveness. Now, why this is becoming so important, and I'm going to change now to the 24-week period, and it really isn't going to show up in this one because this is a blank workbook, but it's important to really emphasize here, this is the FTE reduction quotient here. And what it's saying is that you're going to total up your qualified costs for the covered period. You're going to reduce it by any of the salary or hourly wage rate reduction, which is that 25% I spoke about earlier. That's a formula that's built into the Excel workbook, and you can have it calculated for you. You're going to then have a net total number. The FTE reduction quotient is applied to that net total number. And this is why I think that is a great strategy for a small business to look at when it comes to the formula of my costs versus my FTEs. Let's say that I'm an employer who's had a 50% reduction in my FTEs. So that would mean once I've done all the math, I would see that I have a 50% reduction quotient. That means that only 50% of my qualified net costs can be included in the loan forgiveness. So let's say that that employer takes their covered period out the full 24 weeks. And let's say that their loan amount, their original loan amount was $200,000. And let's say that their qualified expenses for that full 24-week period were $400,000. You're going to multiply that $400,000 by the 50% FTE reduction quotient I just mentioned, and you're going to see that the net number now is $200,000. It's equal to the amount of their original loan, so they still achieve 100% loan forgiveness, even though they had a drastic reduction in their FTEs. So my point of bringing this up to you is that the ball really is in your court when it comes to when you submit your application and how much of your loan can be forgiven. If you're one of the unlucky few businesses that have had a great reduction in their FTEs, then you're going to want to stretch out your covered period, maybe for the full 24 weeks, and you're going to want to be calculating what your FTEs are in that process. And let's say that at week 16, you're at a 70% FTE reduction quotient, and that's enough to get 100% of the loan forgiven. Then file then. If you're not, then maybe wait a little longer because you'll incur more costs, and the higher the amount of costs you've got, the higher the amount of loan amount that can be forgiven. I can't stress that enough, that the SBA really gave us a great gift here when it comes to how we get our loan forgiven. We are in complete control of it if we have the ability to use up the funds during that 24-week period and retain enough employees to cover enough of the loan to be forgiven. So it's the greatest piece of information you could get from this if you're a business owner that has had a significant reduction in your FTEs. I don't know really if it was meant to be, or if the SBA will change that rule, and if they come back and tell us that they're going to require us to reduce the amount of dollars that we can use in the FTE reduction quotient calculation or not. But in the current forgiveness application, and particularly in the EZ application, there's no reference to it at all there. So it'll be interesting to see what happens with that. But for right now, that is our guidance. That is our belief that you can take out the costs to a greater period of time if you have an FTE reduction quotient. So back to my original conversation, if I don't have any reduction in FTEs, or maybe it's a minor reduction in FTEs, then maybe I need to go 10 or 12 weeks so that I use up all the money, and even though I have an FTE reduction quotient, I can still get 100% loan forgiveness. For the most part, in all the different examples and samples and real life calculations I've looked at, it's almost impossible for somebody not to get 100% loan forgiveness if they've retained more than 50% of their payroll. And it's just math if you think about it. If my loan was originally based on 2.5 months or 2.5 twelfths of my payroll costs, and my forgiveness now can be based on as much as 24 weeks or 2450 seconds, that's a much larger number that I can count in the forgiveness process compared to what the loan amount was in the first place. So clearly, any business that has that type of a situation should be okay, even if they've had a pretty substantial reduction in their pay. I'm going to touch briefly on the EZ application. Now, mind you, I said a little while ago, for whatever reason, the SBA may change the application again. We'll have to keep our eye on that and see what happens. But with the EZ application, it's really for only 3 classes of businesses. But what I want to point out here is that I think it'll include a lot of borrowers. Now, the first class is pretty straightforward. It's a self-employed independent contractor or sole proprietor that made a PPP loan application and did not include any payroll in the loan application. So they didn't have any employees, it was just them. They can use the EZ form with no exceptions. And it should be quite easy for them to apply for the forgiveness now, because their payroll costs is simply the $20,833 cap, or the percentage of their Schedule C net income or taxable net income for their business divided by the number of weeks that they are in their covered period over 52, capped at the $20,833. So if you're a sole proprietor and you made a loan, got a loan, and your loan was based on compensation of over $100,000, there's almost no way you cannot get 100% loan forgiveness now. And you'd use the EZ form and simply check that box here. The other 2 reasons for filing the form EZ are the first one, they're actually the safe harbors are what they are. And the first one is that you have not reduced any of your employees' pay rate by more than 25%, and you have not reduced your average employee's pay or paid hours or the number of employees during the period from January 1st on to the end of your covered period. So if you remember, that is just one of those safe harbors I mentioned before. It's not technically a safe harbor, but I keep calling it a safe harbor, and it's just this one right here. So what they're saying is on the EZ form is if you never reduced your employees' pay or average paid hours, and you didn't reduce anybody's pay rate by 25%, check this box and you can use the EZ form. And then the last one, it gets a little more complicated, but that's the one that says, I haven't reduced any of my employees' pay rate by more than 25%, and I have not, my business was unable to operate after March 1st, 2020 because of a local, state, or federal order for closure based on guidance from CDC, HHS, or OSHA. That's the one where I believe a lot of businesses will fall under. You'll see a lot of borrowers using this exemption. The one thing I must tell you is that the SBA is telling us that you have to provide documentation for your closure. So if your mayor, your city council, your county government, your governor, if somebody issued a closure order, you want to go back and obtain a copy of that order, and you're going to submit that with your application for forgiveness. I think if you simply check this box and not provide any information, your lender might not accept it. So remember that you've got to provide documentation for your closure. Some of that will be fairly straightforward. Certain medical offices, certain businesses like a massage therapist, they were ordered to close and they were completely shut down. So some of them might be a little more obvious, some of them might not be as obvious. So you'll have to really make sure you get the proper documentation for that in order to apply for that. In the EZ application form, you'll notice that there is no reference whatsoever to FTEs because you've met the full-time employee equivalent exemption already by checking one of the boxes above. so you never have to measure your FTEs for the EZ form. So that's something to also keep in mind. I think the other item that we are still a little bit gray on, but we believe that we'll get some more information on it soon, has to do with the retirement plan expenses. And I'm going to talk about that just real briefly, because the SBA did tell us that in the EZ application, there is a really brief commentary, and it's only in the EZ application that says a owner employee's retirement plan contribution can only be included up to 2.5/12 of their 2019 contribution amount. That's not mentioned anywhere else. It's not mentioned in the IFRs or any frequently asked questions. It's strictly in the EZ application. So we're looking to see if the SBA is going to either correct that or if they're going to include it in further guidance in the future. For right now, we're advising people that they probably should limit the retirement plan contribution for owner employees to 2.5/12 of their 2019 amount. For non-owner employees, there is no limitation. So again, it's possible to pay your 2019 retirement plan contribution during your covered period and fund at least up to date your 2020 retirement plan contributions and include all of that for your non-owner employees. So we'll have to see where it goes as far as that's concerned, but that's the advice we're giving people right now. So in a nutshell, that's pretty much the nuts and bolts of some of the items I wanted to point out in this little tune-up. Wanted to try to keep it as short as possible. I didn't take any questions or respond to any questions during this video, but I will make sure that if you email me questions, we'll respond as quickly as we can. We're getting quite a few emails every day, so please be patient with us. Hopefully, we'll be able to respond to you as quickly as possible. If you've purchased the workbook, I want to thank you very much for doing so. If you have not purchased the workbook and you'd like to, simply go to www.pppexcel.com and you can purchase the workbook there. I really appreciate you guys participating today. Have a great July 4th. If you're watching this subsequent to July 4th, I hope you had a great July 4th. Take care. Have a great day.